Hello and welcome back to this week's episode of Uncontested Investing. I'm your host, Nate Zielinski, joined by my co-host, Suzanne Andreessen. And Suzanne, we're going to continue our conversation about property types and niches. And today's topic is exploring mixed use for diversification and why investors should be tapped into this and what they should know about it.
There's a lot of opportunity for them to look at and diversify their strategy as well.
I think some big common examples is kind of an intro to mixed use. Storefronts with apartments above, common to see on, main streets of cities, things of that nature. We have office space with a residential unit above. There's actually a mixed use property near and dear to my heart. When my brother moved out of the house from college, he lived above a dentist office. So I have experience with mixed use properties, and a live work loft, which half office space, half living space, a unique opportunity popping up in the past few years. So that's just a few examples right off the top of mixed use. And they can be zoned for multiple uses as well, which I think offers another layer of flexibility.
Well, and that's something you certainly want to pay attention to before you commit.
Yes.
Check with your local zoning officer, make sure all the codes, by putting a living unit above something, you may have a little bit more fire protection and things that you have to do that may or may not have been in your spectrum of spend.
Yep. And I think it's important to know too, the better or the more versatility that a mixed use property has, the better it is for an investor. And it's always important to keep in mind, as we talked about with zoning, you want to cross your T's and dot your I's. But just because when you secure the property, it was used as an office space before you got it, that doesn't mean that you just have to keep it as an office space. Yeah, it might be well equipped to continue operating as an office, but you have a lot of different possibilities and a big client pool to choose from when you're trying to fill that commercial side of your property.
So, in multiple income streams help to mitigate some of the risk. And I have a personal experience in one of those. My husband and I, a year after we got married, which I wouldn't recommend that schedule in this project.
Married to mixed use, not for the faint of heart.
Well, it was two brownstones that had a retail space on the first floor, commercial tenants on the second floor, and living space on the third floor.
Okay.
And we actually occupied the first floor as we renovated the living space for the third floor. And there's when we were first a tenant with the first right of refusal to buy, and we purchased that, we were unaware on how the leases were rolling in and making it a very attractive funding strategy for our funding partner. And with that, we had the deli was on the first floor, which was I'm not cut out for retail space. I learned that the hard way, but did it for 3.5 years. And on a second floor, we had an architect and a landscaper, and the third floor was two residential buildings. And actually one of the third floor spaces was an interior decorator. And so those spaces actually complemented each other.
Yeah, that sounds like a fun little building.
Yeah, well, so it was a high-end architect, and she was doing some really both commercial and residential drawings. And then the interior decorator, she had some very high-end finishes. She would do some Phoenician plaster, or she actually gold leafed a wall to show some of the things. So, and then certainly the landscaper. So we had if you can manage that in mixed use, where you had the opportunity to have each one of them support each other, it was a very harmonious environment.
Yeah, and I think not everybody's going to be able to experience that with their first mixed use property, but something to keep in mind, something to aspire to, right? If you can have that versatility within your mixed use property, you set yourself up for so much success, and it can put an investor's mind at ease, right? The worst thing that an investor can have is a vacant unit, but not always do the residential cycle and commercial cycles match up, right? So if that commercial unit is vacant for a little while, but you have 4 to 5 tenants renting out the residential space in your mixed use property, then you're good to survive, a month or 2 or 3 until you can find that commercial tenant, and vice versa, right? The commercial tenants are going to pay a little bit more on their lease for the more square footage that they're taking up. So if you're, renting out 2 of the 5 units, you have some leeway to catch up and fill out those residential spots.
Well, as long as you have enough income to cover your mortgage payment, your financing payment. But there's also, we cross, you have to, and be prepared to even switch your philosophy, midstream. We had the landscaper decided he didn't want the full space. So we had to decide, do we rent him an office which we did, and then we actually brought in another person to rent, which was a real estate company, so which also complemented the strategy. But be prepared to think outside the box to solve a solution. Where we had 3 offices now going to individual businesses versus the entire space to one.
Yeah.
And there's something, and that's we saw that kind of happen during COVID. Different philosophies. Find a way to just what works for you.
Yeah. And I think for investors that are a little hesitant to jump into the space, finding properties like that is a huge win, right? So it doesn't have to be multiple residential units in one commercial. It can be multiple commercial units and fewer residential. So if you can find those opportunities where you can stack certain types of the mixed use property, you can really protect yourself in the long term when it comes to tenant turnover.
Well, and that's a piece that you also want to pay attention to. As part of the risk is how are you going to market those vacancies? Residential and commercial are two very different things.
Yeah.
They actually have 2 very different commission rates as well. It's a much higher commission rate for the commercial, but the benefit of that is a longer term lease traditionally.
Yes.
And traditionally that lease has other components built into it from escalation to all of that on how you're going to maneuver that, whether it's 3, 4, 10 years, whatever it is. But make sure you've put that in that thought process in as you're developing your marketing strategy.
For sure. We're going to highlight some more benefits of exploring mixed use properties for diversification. We're going to take our first break of the episode, let our sponsors jump in, and we will see you very soon.
See you soon. REI Inc. is the premier monthly publication for real estate investors. Dive into a wealth of expert insight and strategies from industry leaders and gain valuable regional market insights, ensuring you always have the best information at your fingertips. Visit rei-ink.com to elevate your real estate investment game today.
Welcome back to this week's episode of Uncontested Investing, where Suzanne and I are discussing exploring mixed-use opportunities for diversification when it comes to adding to your investment portfolio. And the next topic is everybody's favorite, the higher cash flow potential that you have with a mixed-use property. And I think right off the bat, the best place to start is obviously with commercial units. You can charge a little bit more with the higher square footage. And then there's another thing called a triple net lease, which I think is an extremely important thing for investors to understand and know about. It offers them to have fewer landlord responsibilities, but it puts them in a position where if they set the lease up the right way, the commercial unit is actually paying for utilities and maintenance of the property.
And real estate tax too.
Yes, exactly. So it takes a lot of the onus off of the investor and puts their mind at ease. So that right there is a massive benefit that every investor should be looking into and trying to take advantage of.
And you can also scale those. A lot of times when you have a new commercial tenant coming in, the fit up is their responsibility. They pay for that. So you may want to have a lower ease of entry point for that initial year or so, because they're putting a significant financial renovation into your property, which all that's doing is really building up the value of the asset. But you need to be able to work with them and make sure that they're successful over the long haul.
Yep. And I think there's some research to be done by the investor as well. But with commercial units renting at a higher per square footage rate, I think there's definitely an area that you can target where, okay, if I have this type of commercial unit, I can charge X amount more. If I have this type of commercial unit, maybe it blurs those lines a little bit and it's a little bit closer to the margins than you want. So always be making informed decisions. Don't just jump into mixed use because it's the new trend, something to do. What Suzanne and I say makes the most sense, but there's always research to be done, and finding that right mixed use property is the big first step for investors.
And commercial traditionally has a much longer vacancy.
Yeah.
Because of the fit up and other things it take to convert from one type of business to the next. So be prepared to carry that asset a little bit longer. Mm-hmm. But hopefully the increased rent will be what helps make that work.
Yeah. And I think the investor can invest in the space as well, upgrade the residential units. If you have beautiful residential units above a storefront, it's going to attract a higher end client on the commercial side and vice versa. So your property is kind of helping each other, right? Higher end tenant, higher end commercial space, beautiful low end commercial spot like on the storefront. Tenants want to be above that. They want to have friends over to, show them the area, show them the nicer area that, or the nicer stores within the area. So it kind of helps the entire neighborhood as a whole if you're starting to invest in your mixed use property and making that residential unit as beautiful as it can be.
Well, and part of that, is is in the surrounding area. And there's a pro to having a mixed use where you've got residential units above and your commercial space below. Your commercial space is traditionally 9 to 5, mm-hmm. and your resident space is 5 to 9 plus the weekend.
Yep.
And that alleviates some of the parking concerns, which
Yes.
can be a problem.
Yes.
So you want to make sure that you found a complementary measure on how you can service that and make
Yep.
sure that your tenants aren't taking up too much of the commercial space that their customers can't
Yeah.
find a place to park. But also, what is close by? Can you walk to a deli or eatery?
Yep.
Can you walk to a grocery store? You know, because a lot of the times when you've got these tenants, they may or may not. Are you on public transportation? Is there a
Yeah.
train station nearby? So there's going to be some huge things that feed into how you'd like to, grow the space, make it a harmonious type of
Exactly.
environment.
Those local amenities can set you apart, right? And when do you ever see out in the middle of nowhere some residential units with a storefront below, right? That's usually in a downtown area, lots going on, lots to attract tenants, right? It's not always just about the living experience. It's about what living in that area can provide your tenant. So that's always important to keep in mind. And you brought up a great point with the 9 to 5 of the commercial side, and then the 5 to 9 and weekend on the tenant side. Your living tenant, if they work their own job, they may never see your commercial tenant as well. So it's nice to have that separation if you can line it up right.
Well, and parking's huge. You know, anywhere you go, parking's an issue.
Yep. Yep. And I think too, when you have a business on the commercial side of your mixed use property, they're going to be very invested in the surrounding area, right? They're going to want to attract people to come to their business. And in turn, that kind of keeps the entire area kept, right? The street is always clean. Maybe there's some manicured gardens lining the street or the storefront. So little things like that can always add perks to the residential side without the investor even knowing it or having to put in any work themselves.
And there's things you can allow either of the tenants to take on. Maybe they like to garden. Maybe they want to be the ones responsible for the flower bed. So that let them decide, be prepared to pay for it yourself. But if it's something that they'd like to do, certainly allow them to have that opportunity as a benefit.
Yep. And I think the last thing we want to discuss in terms of mixed use property, how do you finance them? Always a big question for investors, right? So knowing your property inside and out, knowing the square footage split and what you can take advantage of, right? If it's 51% residential, your options can, vastly improve, right? If it's dominated by the commercial side, you want to look at a commercial type loan that sets you best up for success, right? So within that property, there are so many different financing options. The investor just has to pick and choose the right one for them to set them up for the long-term cash flow.
And I would consider, and my husband and I were so naive when we entered into that first investment strategy. And we were very nervous, and it had no concept about the rent roll and how that it was a very positive rent roll, that it more than covered that, the cost of financing. But, sit down with your funding partner first and figure out, how can we make this work so that what you need to do, even offer it prior to acquiring the asset. There's a lot that goes into that.
Yeah, it's a beautiful opportunity to partner in the industry as well, not just talking to your lending partner, but say you're strictly investing in residential properties, 30-year long-term leases or fix and flips, right? You have no experience with commercial. Maybe you have a colleague in the industry, a networking connection, or a friend that you know and trust. They explicitly are investing in warehouses, storefronts, restaurants, things of those nature, right? So if you can combine forces and have somebody that's a pro or an expert on the commercial side, you can take care of the residential side and kind of learn by osmosis with your partner. And then down the road, you're investing in mixed use properties all by yourself because of that previous experience.
And there's an increasing trend right now of opportunity zones. And there's, you've got everywhere you go, there's a vacant warehouse, and they have beautiful, good bones. They're in fact good bones. But you can really convert them nicely where you can have, the residential on the top floors and the commercial down below, but also having, some cool restaurants and things that are on that space and, exposed brick walls. Every unit in that is unique, but there's also benefits to that from tax savings. In Maine, they had the Brunswick Naval Air Station was closed, and the government actually transitioned that over to the Brunswick, the community, and that it became an executive park. And in there was a 10-year tax benefit, and I helped expedite in a dementia facility selfishly for my mom to stay there. But they had a 10-year tax savings, and all of the infrastructure was already in there. So you had, the water, the gas, and the sewer. So they could, very quickly convert that into their business, but they also received a significant tax benefit.
Yeah. Yeah. So the benefits are not just the rent you can collect from a commercial tenant, having multiple residential tenants. It's extremely important to look into. Industry professionals like Suzanne can certainly answer those questions. Your lending partners may be privy to some of those answers as well. So use your resources when you're deciding to enter into the mixed use space. It is appealing, but it's not without its drawbacks or roadblocks. So you got to make sure that you're prepared for every situation that might come up if you're going to take on a residential and a commercial, a mixed use space.
But they can be very rewarding.
Mm-hmm.
You can really, you can develop something that becomes, a landmark to the community.
Yeah.
And people really talk about that. So there's a lot of things. You can have some fun with it. Take your time. And do it right, but enjoy the project.
Yeah, I think for those creative investors out there, it can be somewhat of a blank canvas, right? Like they can upgrade the residential units to their liking. They can pick and choose their commercial tenant to some extent. Obviously, you want cash flow, but you can really set up a space and make it your own. It's not just, it doesn't have to be as cookie cutter as it may seem on the outside looking in.
And we have an article coming up in the May issue of REI Inc. magazine with a company called Aramco that they actually converted a building from mixed use into, so it's actually walking you through the process. And we've seen even some of the places that a strip mall where you would never think of it turned into residential units.
Yep.
So there's a lot of, just think outside the box. Don't look at something and say, oh, that's not what I want. Look at something and say, what can I do there?
Exactly. So that'll do it for us in our discussion with mixed use properties for diversification. Investors, get to work, get out there, find your next mixed use property investment, and good luck. For Susanna Andreessen, I'm Nate Zielinski. We'll see you next week on Uncontested Investing.
Enjoy the project. See you soon.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.